Hello, and thank you very much for attending today's webinar. I'm Elliot Rowe from the RPA Group, and I've been kindly joined by Joe Edwards at Capitex. As many of you that have viewed and been sort of come to our webinars and things before, we sort of specialize it in UK investment property, and ultimately, the best way to try and do that. Um, one element of that whole process is obviously how you use the money that you want to purchase the property with, and and what currency it's held in, where it's based and all that sort of thing. So Capitex are our sort of preferred partner from an FX perspective, and today we're going to go and talk through all of that and give you an insight as to how both ourselves, the RPA group, and Capitex can help you purchase that UK investment property. As I mentioned, I'm Elliot, and I'll pass you over for Joe to introduce himself, and he can just mention a bit more about his team at Capitex.
Thanks for the introduction, Elliot. So I'm Joe Edwards. I'm the Managing Director of Capitex Group. I can see on the screen there. I look to be joined by my two co-directors, Lou and Josh, but it will just be me on this call. They may have had a lucky escape, but yeah. So essentially, we are a business that facilitates the transfer of funds from one country, if you like, or currency to another, with that being a sort of key part in the transactions that RPA's clients will need to do. We will be working with RPA and their clients to ease this process.
Perfect. Yeah, exactly. This is great. Okay. Look, for many of you, you'll be aware of it, but who are we in the RPA group? We're headquartered here in the Middle East. We have offices all over the world, mainly based in here in Dubai head office, Turkey in Istanbul, and Nigeria in Lagos and in Abuja, and in the UK itself. We have clients based in those jurisdictions and all over, and so we sort of specialize in helping and advising those people to purchase UK property. If you just obviously from with a lot of these things and understanding the company that you're working with and having that trust in them, and that they are able to assist and guide you through that process, and have the right partners like Joe at Capitex and his team. You just have to look at our reviews, and you can see for what our clients have all said really about how we have been able to assist them and sort of end up achieving their goals of purchasing UK property. Obviously, the relationship and the advice and everything we give you, from whether it be on the currency, on the legal advice, the mortgages, and everything else, that is all very important. But obviously, you're purchasing UK property, and we have relationships directly with the developers in the UK that, and from our own due diligence and our own understanding of what will work from an investment perspective, and we decided to partner with and offer their product, their properties, projects to you, the client base. This is just really giving you a quick rundown of how those services work out really, and then how it is integral to that investing in the UK. We do our research and due diligence, as I just mentioned, so ensuring working with the right developers and the right partners to offer you the best service. We look through the property investment and give you that investment advice. So that's looking at the cash flows, looking at the locations, what is right for you, what are the amount of funds that you have available, how that fits into what you're ultimately trying to achieve. You then have the specialist advisors, whether it be from conveyancing, mortgages, FX, as we're saying here, tax advice as well, and have those partners in place to help and guide you through the process. And very importantly as well, we have the lettings and the property management guys based in the UK who ultimately will look after and maintain your asset while you're based overseas, and it can have that hands-off, that hands-free approach, which will really help help support you with those properties based in the UK. I don't want to sort of, and I won't be looking in depth at all our projects and our portfolio and that sort of things, but just to give you an idea, and then this will also like nicely sort of tie into what Joe's going to talk about. It's just an example project, how it works, where it works, the sort of things that we have to offer, say, in the UK. So this, for example, is Kingfisher in Red Bank in Manchester. It's by a developer called FEC, who are which is short for Far East Consortium. It's a joint venture with FEC, Far East Consortium, and Manchester City Council. It's a billion pound investment, and you've got over ultimately it'll be 15,000 new homes in a huge regeneration of Manchester, essentially Manchester city centre, and it's called, the area itself is going to be called Victoria North. This is a perfect example of where we've gone out and we've spoken to the developers, we've looked into the market, and we're trying to find the right partner to go with. So we've got an incredibly well-funded international developer, and who have JV'd and partnered with Manchester City Council to that sort of cover, and essentially local government. That covers us from our perspective and where we see it. Look, that makes it a very interesting and secure investment model, and really gives us the reassurance that we're not gonna that there will be less hurdles to sort of, or less challenges because of the partner we have made with these guys. This is just sort of give an example of the project itself and the scale of it. And sort of, you can see here from the quay, you've got the likes of a new railway, metro station, schools, primary schools, hotel, sorry, get my words out here, primary schools, amenities essentially across the board, whether it be the new tube stops or metro, which you have in Manchester, to the primary schools, to open green space, and ultimately close to major transport links like Manchester Victoria train station down here in the bottom left hand corner. You also got Noma, which is a large redevelopment of commercial space. Bank of America have just moved and taken, I think it's 13,000 square foot within Noma itself. So you've got a huge base from a tenant perspective there as well. And all these are the sort of things that we look at when we're ultimately proposing the projects to yourself. This is a bit of a CGI of how it will look, and in the distance here, this is Manchester city centre, and this is the tower blocks at the southern end of the project, closest to the city centre. Also, you'll see here a building in the middle here, the green building in the lower rise property. That is actually a clubhouse for the residents, which makes it quite unique for Manchester itself. But you've got things like wellness centre, gym, space to be able to co-working space, restaurant, bar, and sort of a real sort of clubhouse for the tenants, for the owners that live within the vicinity, which is unique really for many projects now that are in the UK. And how it all works, sort of from a very high level, purchasing perspective. You're looking at 1-bedroom apartments starting from 295,000, 2 bedrooms looking from 450,000, and 3 bedrooms from 591,000. This is completing in Q2 20. Sorry, there's an actual error. That's Q2 29. And what's interesting here, and this is where Joe will be able to explain a little bit of detail of how he can help you as well. But there's a payment plan in place with this particular project where you pay 10% on exchange, so we're roughly 1 month from reservation, and then 10% 12 months later, and then the rest on completion in 2029. How it works from a currency and sort of the advantage of using Capitex when purchasing something like this, Joe will explain shortly. But all I can say, there aren't many properties or projects that have these sort of payment plans in place, and that are fully protected in terms of your capital. It's not accessed by the developer, it's held in escrow accounts. And without further ado, I'd like to pass over to Joe, and he'll just talk through how Capitex can help you when it's looking at from an FX perspective and purchasing property and using Kingfisher as the example and the sort of payment structure and plan that we just discussed.
Yeah, thanks, Elliot. So just to kind of start from the beginning and to introduce Capitex. So we're an FCA authorised payments institution based here in London, where I am now. We also have a presence in the UAE, and we specialise in helping companies and individuals manage their foreign exchange exposure. So a lot of the companies we work with on the corporate side, they sort of entrust us to manage their risk in dealing in international markets. And the concept is more or less exactly the same when working with private clients that also have an international exposure to currency risk when they're making international investments, such as Kingfisher as an example. Or they're quite simply moving money from A to B for whatever it may be. We tend to specialise in the higher volume of cross-border transaction, such as an investment or a property investment into the UK market. And looking at this example here with Kingfisher, what Elliot is basically highlighting is when you purchase a property, one such as this, where there is an initial payment that's due and a time period for the next instalment or completion of that property. That period from the moment you agree the contract and sign terms and pay your reservation fee to the next payment due or instalment being due. I can see on here the payment terms. There's the next one would be 12 months later. That time period there, we call that in the market effectively. That's the currency risk period. So that period there is effectively risk to you that the property may cost you more or less in your base currency being the one that you're sending the funds from. So that may be dirhams, for example. It may cost you more or less 12 months later. So what we aim to do is to give our clients certainty when dealing in international markets, so that when you're making an investment such as this, because we are treating this as an investment, you can start to budget accordingly, so that 12 months later or even further than that, you've got a strategy in place to protect against market volatility. So what I'll do is, as Elliot moves through these slides, I'll begin to kind of delve deeper into basically giving a sort of 101 on FX, and I'll try and keep it as simplified as possible, because I mean I've been doing this job for a long time, and there's parts that I don't even fully understand, and every day is a school day, as it were. So I'll try and keep it simple, especially because some of the companies that we deal with, they understand this, and it's I guess the language that we use when dealing with our corporate clients is different to the language that we use dealing with our private clients, where it's their first time investing internationally, which I know may be the case with a lot of RPA's clients. So here, you can see the mission. It's our mission, and that is certainly to simplify and manage fund transfers for international real estate investments, which goes on from my last point there. If you could proceed to the next slide, Elliot. That moved along?
Yeah, it's just gone what understanding foreign exchange, FX.
Okay. Doesn't look like my screen's moved. Okay, all right, there we go. Might be a delay. So what is FX? So foreign exchange is simply the conversion of one currency to another. And foreign exchange plays a crucial role in day-to-day life when we think about trade, and goods moving around the world, investment, as is the case here. The UK, I know is a hugely attractive place for foreign people investing in the UK property market due to everything that the UK has and the kind of stature that it holds. So there's lots of money coming into the UK, and it needs to be that money needs to be exchanged into pounds in order for those transactions to be delivered. So here we've got an example that kind of refers to an individual that is residing in the UAE, for example, but it could be anywhere, and they're investing into the UK market. When these slides were drawn, were completed, the rate was different to where we are now. Now that exchange rate from dirhams to pounds is about 4.8, so it's slightly higher. But at the time it was 4.6. So we'll use that as the example. And if, for example, there's a investment that costs 2.3 million, that costs £500,000, and the rate was 4.6, then that buyout would need to transfer 2.3 million at the agreed rate to buy that £500,000, that £500,000 to secure the property investment. Now, where FX becomes tricky is that it's a fluid moving market, and it's volatile. So if, for example, the exchange rate increased to the levels that we're actually at now of 4.8, the property cost in the base currency would actually increase by 100,000 dirhams to 2.4 million. That's a move that we've seen so recently, and would, that could cause the property to become more expensive than you would have originally budgeted for. On the other side, if it was to, so it just popped up on screen, I'll close that. If it was to drop, if the rate was to drop to 4.4, then the property would become cheaper. So that shows you how volatility can make it more expensive or cheaper in your base currency. I'm sure if it's there we go. So there's two types of contracts that we sell here at Capitex, and these are effectively what we use to manage the risk for our clients and deliver on the movement of their funds, as it were. So the first is a spot contract. So that's a currency conversion which is due to be settled in 2 days. So anything outside of 2 days, so for example, putting it into a real life example of a property investment, a reservation fee, for example, or a deposit, where you need to get that money over to the solicitor or the developer within a short time frame. So on that occasion, we would utilise a spot contract so that we could deliver those funds same day or within a couple of days. Outside of T+2, as we call it, outside of 2 days, we would use a forward contract, and this is the true risk management tool that we have in our arsenal to help manage the risk. And effectively, what that allows us to do is to fix a rate in the future, so that it doesn't move effectively, and the amount that you want to send. For example, going back to the example of Kingfisher, there was another 10% that was due in 12 months. So say, for example, that 10% was 50 grand, £50,000 that was due in another 12 months. We could effectively lock in the rate to purchase £50,000 for a date 12 months in the future. So what that would effectively do is fix the rate. So time would pass, 12 months later, the payment's due. We have a contract here with our client that would be required to settle. And effectively, you would draw down from that contract, pay in the dirhams, they would be exchanged to pounds at the agreed rate. The forward contract would be settled, and the money would then be sent to the solicitor at the agreed exchange rate. So that's effectively how the forward contract works. Just wait for these slides to move. So here you can see a chart. And the idea of this chart is to show you how kind of cyclical the market is and how volatile it is as well. Now, this chart is a little bit, I guess it would have been better for me to include a later chart, because we've seen lots of volatility in the market as a result of Donald Trump's tariff policy, which has caused the dollar to weaken and against other currencies. Therefore, so has the dirham, because that's obviously a pegged currency, which we'll come to speak about later. But it can show you the importance of having a risk management strategy in place to ensure that kind of your budget, if you like, is not being eroded or whatever it may be as the market moves. So here we can see kind of different events. October of 2022, the market dropped heavily. So in that sort of scenario, the market's coming down. That means it's going to be effectively cheaper for you guys to buy to buy property in the UK. And then obviously it's getting more expensive. So depending on the timing that you've agreed to purchase this property, it's kind of very unlikely that the market's going to be in exactly the same position when the next instalment is due, than kind of what you've accounted for. So in that scenario, we'll kind of work with you, on hand to work with you, to ensure that kind of we can, in turbulent conditions, we can guide you through, to make sure that the property is not going to cost you more than what you've accounted for. And that's all we try to do here. We're effectively risk management strategists. We don't try to help our clients get involved in speculating on the market, because effectively what you're doing with RPA is securing an investment, and it is an investment, and we don't want that investment to cost you more than what you'd hope for, because then the return on investment isn't going to be a great one. So you have to have the right risk management tools in place. So I know I've spoke about this, on the past couple of slides, but the effects of exchange rate volatility. So I'll just go through this example. So Mr. and Mrs. Smith are invested into a residential property currently in construction to the value of £500,000. The property has a completion date of Q4 2025 with a 20% initial deposit and 80% due on handover. They have paid the 20% and are cautious that they will be exposed to market volatility between now and the completion, as they have budgeted at the current rate of 4.6 for 2.3 million dirhams. So 2.3 million dirhams is all Mr. and Mrs. Smith want to spend on the property. That's all they can afford. That's what they've saved, and they don't have more than that. So what we would do in that scenario is ensure that 2.3 million dirhams, it stays at that figure and it doesn't become 2.4. So the solution, Capitex suggests to forward book the 80% for a Q4 value date, fixing the rate at 4.6, ensuring the property cost doesn't rise above budgeted levels. In doing this, Capitex was able to provide greater certainty over ROI in base currency using forward hedging. Now, a lot of the clients that we do this for, and we do this for clients, that have various budget levels. But one thing that's important to kind of highlight is that when entering into a forward contract, and also a forward contract isn't always the preferred strategy. Some of our clients will prefer to not actually book a forward contract and let the kind of market move and take the risk, take a bit more of a risk, because when booking into a forward contract, there is a deposit that needs to be paid. People might not have the excess cash flow, and people might just want to take that chance. And I guess currency risk is one that is always present when dealing in international markets, and it's something that should be factored in. So, going back to the example of Mr. and Mrs. Smith, I would always suggest that if you do only have 2.3 million dirhams aside, or whatever it is in your base currency, try and factor in 10% leeway as a buffer to ensure that if markets do move adversely, you can still fulfill on your contract with the developer. And I was just coming back to another point, which I can't remember, but I think I've
you made the point there. I think it's really good.
Yeah, good. So this is probably currency pegs in GCC states is probably something that's worthwhile discussing, given the fact that RPA are based in the Middle East, in the UAE, where it is a GCC state that has its currency pegged to the dollar. And I guess not everyone understands the reasons as to why currencies are pegged. But it definitely helps stabilize that currency, and it's definitely a good thing. So the dollar is the currency that the GCC states have used to peg their currencies against. And the reason for this is going back to the 80s. The GCC states had billions and billions and billions of revenue that was generated from oil. And obviously, with oil being a sort of fluctuating commodity in itself, these states needed some stability, I guess, some stability in their oil revenues, rather than the revenues kind of fluctuating so much, and that obviously affecting the revenue that's being brought into the country from oil. So the way that these countries manage that is by pegging it to the dollar. So what that effectively has done is help stabilize that, because a stable exchange rate with the US dollar helps them avoid negative effects of currency fluctuations on oil revenues. So, they wanted to ensure that their oil revenues remain consistent, remain stable. And that is effectively a similar tool to what you could, as a client of RPAs, could do when investing in the UK property market. There's a volatile market, whether it's a commodity, in this case it's the financial markets and FX, and you effectively have the option to put into place a risk management strategy to stabilize that. So you can ensure that the property isn't going to cost you more in the future.
Yeah, and obviously that can be the same theory and principle that can work for Turkish lira or Nigerian rand. Naira, thank you. Basically, there are lots of currencies around the world that Capitex can assist you with, but it's not just. But it's obviously being, as Joe's mentioned, being based here in the Middle East, it makes a lot of our clients are GCC based, and so using the currencies, the dollar pegged currency makes a lot of sense. But the same principle for everything that we just talked about runs true, right, Joe?
Yeah, correct. So I've explained this slide, so I guess it's good to move to the next one. So in amongst all that FX jargon, and hopefully it wasn't too tedious or difficult to understand, but what are the benefits of actually working with Capitex? So in the in the UK, FX is like my industry, FX and using a company like Capitex is very, very common. I'm aware in different parts of the world it's less known, and sort of the banks are the main payment service provider that you would go to send money overseas or locally. So what this effectively does is breaks down the reasons as to why you would use Capitex. So firstly is the rates. So we have the flexibility to provide different exchange rates. We will give rates that are far more competitive than what your bank will be able to. Fees. So there are no fees to using our service. We make our money on the margin, as we call it, which is the difference between the rate that we buy from our counterparties and we pass on to our clients. So, for example, if the market is 4.6, we would apply a small margin onto that would be significantly cheaper than what you would receive from your bank. Products. It's very unlikely. In fact, it's highly unlikely that you will be able to use risk management tools that we've discussed, such as forward booking and hedging, through your banking provider. You'll need to go to a specialist such as us to do that. Customer service. So we effectively operate a private bank style approach to foreign exchange. Every one of our customers will have a dedicated account manager, a point of contact to speak to at any time. So when you do want to know where your money is, or if we've got some sort of documentation or compliance element to deal with, you've got a single point of contact that's going to sort that all out for you, as opposed to dealing with your bank where you may not have that resource. And expertise. So those dedicated account managers are experts in understanding the market. So not only will they just help you from an operational or admin point of view, they're going to be helping you with managing your risk. We'll be looking at the payment plans, such as the one that we saw with Kingfisher, and they're going to be devising a risk management strategy to help you manage it. With a bank, you're not gonna get that level of service. So some additional benefits to our service. So I'll jump straight onto the multi-currency accounts point there. So every one of our clients, when they set up an account, they get access to a multi-currency account. It's a UK-based account that is named. And it can be used it's basically used to collect funds and exchange funds. So one of the reasons that's important, especially when discussing a UK property investment, is solicitors here in the UK are increasingly reluctant, should we say, to accept funds from a third party, as it were. When using the named multi-currency accounts, we will send the funds in your name. So they'll be received into the solicitor's account in the name of our client, not from Capitex Group. So that's quite important. That enables us to kind of service this market, really. Restricted currencies. So there are some currencies I know that or jurisdictions that are more difficult to service. And even Capitex will struggle to deal with those. So they're currencies where they're basically illiquid. So there's not the liquidity in the market to be able to buy it. But we do have partners we work with in those rare kind of examples that we can refer you to enable you to remit the currency that you need to. I spoke about transparency and on the top point, so some jurisdictions are considered high risk in the banking world. So that means when trying to send money directly from your banking platform, if you're based in one of those jurisdictions, can be hard. So if that jurisdiction sits within Capitex's risk appetite, which we do have, and we're able to facilitate that business for you, we'll obviously need to monitor that on a case-by-case basis. But we'll be able to, we will have, due to our banking relationships, we will actually be able to remit those funds for you by sending the funds into Capitex, into your named virtual IBAN. We exchange it and then we send it to the solicitor. So it's going to be a much more friendly transaction than sending it directly via your banking platform from a high-risk jurisdiction.
Yeah.
So what's the process? How do you proceed with us? Well, it's really all starts from an introduction. So I guess it would be an introduction from RPA group to myself or someone within my team. And then provided we can facilitate the business, we'll direct you to our sign up link, which is an online link that allows us to collect some preliminary information to allow us to onboard you as a customer. That will then be passed along to our KYC team, our compliance team, that is based here in London. And that will they will generate, I guess, a documentation request that you'll need to provide to us to allow us to open the account. Once the account's open, we'll book a transaction that will generate a transaction receipt and let you know. I say a book a transaction, we'll book an exchange. And that will let you know the figure in your home currency or base currency that you need to send to settle the payment to the solicitor. So to settle your obligation to your purchase. And that is effectively the process. It will all be backed up by receipts, documentation. So we'll be happy to obviously provide that information to RPA or to yourself to ensure that everyone's got what they need to and knows where the money is.
Fantastic.
So these are our requirements here. These are our documentation requirements of what's actually required to open an account with Capitex to purchase a property, and they kind of sit linearly to what you will be required to provide anyway.
Exactly. When you're purchasing a property, you require these documents. So it's not, these wouldn't be additional documents. You'll be able to literally what you've sent to your solicitor, you'll be able to use for Capitex. Excuse me. You'll be able to use for Capitex. Excuse me. You'll be able to use for Capitex exactly the same. So it's not. This isn't adding more work to the process. This is just the same documents passed over to Joe and Joe's team, and to get to manage your currency transactions as well.
Exactly that.
Perfect. Okay. Yeah, I mean, look, this is, as Joe's mentioned, and this can make a significant impact on your investment. Getting if you're managing to fix a rate at the right time, it can take away, the stress and strain of having to worry about the next payment in 12 months' time and exactly how much you'll need. It makes the process a lot smoother. It especially in many different currencies, we see these fluctuations all the time. So just to make the process as smooth and as simple as possible for you, using Capitex and using Joe and his team would really help you when you're going through the purchasing process. I think as Joe has mentioned, the team that they have experiences with many different currencies, many different clients, and we've passed many clients through, and it just helps with sort of basically navigating the waters of ultimately buying that property and moving forward with the investment and achieving your goals. So we're really happy with Capitex and the service that they provide with all of our clients, and I think Joe's happy with us passing them across to him as well. So
we certainly are.
Yeah. Joe, do you have anything else to add?
Yeah, I guess just one final point that's I guess not a disclaimer as such, but probably something that is important to mention is that with this being with our market, I guess what I'm trying to say is if you are interested in speaking with us, it's what we'll have to do is just to discuss your requirement, find out kind of what currency it is that you're working with, because basically what I'm trying to say is not all currencies can be hedged, for example. So that doesn't mean to say that we won't be able to facilitate your transaction, but if you're working with an exotic currency that is illiquid, the hedging may not be possible in that currency, but with the majority it is. So I would just suggest, if you are interested in speaking with us, just reach out to RPA, and they'll happily introduce you to us, and we'll look at your case and look to assist you.
Perfect. Great. Okay. Right. Well, thank you very much, everyone. Any usual sort of situation with any questions or anything else like that, they will be answered. One of the team will give you a call, and we can make that introduction either to Capitex and understand a bit more about the currency side of things, or the RPA side, where it be a certain particular property like Kingfisher, or just to start having conversations about sort of investment journey. So yeah, thank you very much, Joe. Thank you again. It's been great having you.
Thanks for having me.
Yeah, no problem at all. Great having you on.
Cheers.
And yeah, speak soon. Thanks, guys. Bye bye.